Nobody move and nobody gets hurt. This is a stick up by Jerry and Adrian, the Legalized Robbery podcast.
Hello, and welcome to Legalized Robbery podcast with your one and only host, Jerry, joined by the incomparable Romanian Stallion once again, bringing you the tips and tricks, the ways to maneuver and outmaneuver people in the stock market and the crypto markets and every imaginable. I'm joking. It's pretty much a crypto market podcast at this point. like many stock podcasts that actually turned into crypto podcasts or channels, because we have to admit, like, this is where the exciting action is happening currently, so but yeah, that's that.
There's still
Before we get to that, sorry, go ahead.
There's still a lot of money in the stock market, dude. Like,
oh yeah.
we shouldn't
Absolutely.
ignore it.
Absolutely. Before we get to that, how are you doing today, Adi?
Good. Today was pretty productive. Yeah. Stock market is up. Crypto market is up. Everybody's happy.
Everybody's happy, man. You gotta feed those mouths.
Except probably people who are holding gold and Bitcoin and oil. But other than that, everybody's
crazy,
happy.
right? Gold actually has been going down. Yeah, even though there's sort of inflation fears, I think, I don't know, it's not enough for gold to react, I guess.
But no. The thing is, last night the Fed announced that they're gonna start tapering, and they actually gave some numbers surrounding it. So basically, I think the correlation is that since they're gonna stop tapering, they're gonna stop printing essentially, which means that the inflation will lessen. So then you don't need an inflation hedge. So
the indicator for inflation is not just the Fed printing money; it's also a bunch of other things.
Yeah, no, it's multiple factors, but this is one of the bigger ones. So
right,
makes sense.
I agree.
How about you? What did you do today?
Just work, putting in work. It's getting into peak season, so demand is high. A lot of requests, a lot of work to do. Gearing up to Christmas, but take it with strides. I try and even everything out with like swimming sessions or like sauna sessions and stuff like that at the end of the day, or just simply workouts and stuff. So I've been feeling pretty good, man. I can't complain.
I'm super jealous. You can go to the sauna in Germany because you can't in Romania.
Yeah.
It's like,
are they butt naked at this point in Romania?
Yeah,
do they wear stuff?
Usually what happens is people have towels and you basically hold it around you when you go, and when you sit down, you kind of fold it like strictly across the junk, basically. Like it's
okay.
Yeah, it's polite, like
polite. Okay.
Yeah.
But
in like
Germany,
in the locker rooms,
all out, man. In Germany, you just let it hang. They literally just god damn. But is like saunas are incredibly healthy. I don't know anybody that's on their health tip, something like that. Check out Rhonda Patrick. She's scientist in the area of I think long-term health, something like that, and she does all of these discussions around studies on sauna usage, on different vitamins and nutrients you need to live a long and healthy life. So I follow her a lot. That's where I learned a lot of the sauna stuff. And helped me loads, man. You just sweat out all of the bad stuff, and as you can see, my skin is nice. I should be doing a beauty blog. Fuck legalized robbery.
Dude, it's
do a skincare blog.
The legalized robbery will tell you that if you would make more money from doing a beauty podcast, you should.
You should probably do.
That is the legalized robbery advice, man. I mean,
there you go.
Yeah.
All right, so let's get
Let's
into our
get to it.
topics today. So today we will discuss Tesla, the behemoth, the one of the most valuable companies today now.
Fifth or sixth
Um,
now.
yeah, something like that. And Elon, the publicly most richest man in the world. And
Sorry, I saw a tweet like Elon Musk is Bill Gates richer than Jeff Bezos. It's this is the peak, man. This is the peak.
hold on, Musk is what?
Bill Gates richer than Jeff Bezos.
Oh, okay, okay. I get
That's
it.
the scale
That's
we're talking
crazy.
about.
That's
Yeah,
crazy. Yeah, I
yeah,
mean the rise of Tesla has been like just jaw shattering. But yeah, we'll get to that in a second.
yeah,
So
yeah.
the next thing we'll talk about is the metaverse. Something we talked about on the podcast along I think it was the same podcast or episode where we discussed Solana. Both things have gone in the
Maybe.
air. A bunch of the tickets that we mentioned. Obviously, Solana is the sixth. I think by market cap, the sixth biggest cryptocurrency now, and so there's a lot of things happening. Sorry, my screen went off.
Yeah, it's fine. It's fine. Yeah, and you know what's
And
funny? What's what's also funny? I didn't buy any of them.
yeah, man, we live and we learn, man. You got to take some
Yeah.
L's sometimes.
Yeah.
See, for me, like we're talking about Polkadot today. I have no exposure to Polkadot. I had some. I think I sold it for some Solana, which was probably
Let me
the smart thing to do, but I didn't get back in again, which was not the smart thing to do because Polkadot
let,
seems like its moment is coming now.
It
Um,
is. And also, since we're doing like these throwbacks, we also mentioned Polkadot in the episode where we talked about the article on Messery
okay,
regarding the biggest VC holdings in the world. And Polkadot was number one. And we were like, both
okay,
of us were like, why is it Polkadot number one? And I think we're about to find out why Polkadot is number one.
okay, okay. Let's
So
get
yeah,
there.
yeah,
Yeah, and then we are talking about pre-IPO investing, and then just general consensus on the S&P 500 doing really well. 84% of S&P 500 companies beat the EPS estimates to date, which is tied for the third highest since 2008. The third highest third quarter. So yeah, let's start with Tesla. Obviously, Tesla has now been very, very highly debated in traditional finance circles, and many experts have said that it's overvalued, that the price to earnings ratios are completely off the charts, and they wouldn't touch it with a pole. And I guess you can sort of get an image of you can get an image of the pros and cons by looking for the pros at Kathy's thesis, which is that Tesla is undervalued because its long-term goal is to become a robo-taxi company, a self-driving one. And then you can look at the cons of it, which could be summarized by looking into what Michael Burry has said about Tesla, which is that the price earnings ratio is completely off, and there's just sort of hot air. But
yeah.
yeah, Tesla beat estimates. They didn't just beat estimates, they shipped quite a lot. I don't know the numbers. I think you might be able to help me with that. And yeah, so Tesla has now continuously in the past few weeks broken their all-time highs and are now in sort of uncharted territory. What do
Yep.
you think?
So yeah, I'll just give a small like backstory to the whole situation. Like Tesla used to be my biggest position on my public portfolio, which
Mm-hmm.
and now it's the fourth. I basically took some profits. I was holding since $330, so I've done more than a lot of gains on Tesla, but I decided to take some profits because it essentially ran up like 50% in October alone. And I was like, okay, this is a bit excessive. Although it was accumulating for some while, I was expecting it. But Tesla has this habit of accumulating for long periods and then shooting up quite hard. Mostly because it's probably squeezing some shorts and stuff like that. But like you said, the reason for that was their estimate beats. Like they obviously beat estimates, and it's not even about the number of cars shipped, which is obviously it's relevant, but it's their gross margin on it. And basically their gross margin is expanding. Like they're having bigger profits per car sold as they sell more, which is usually a sign of better production capabilities. And we've seen this with their expansion of the factories and with their how their actual production is working, and the whole thing with the gigapress and everything they are investing in producing the cars. And there were some people who were saying like a few months ago that Tesla will win by sheer engineering and optimizing the production. Everybody was like, have you heard the Volkswagen and stuff like that? And I was like, yeah, also true. Like, I'm sure there are a lot of German manufacturers who have or Japanese for that matter, who have perfected building a car. But maybe the skill set for building an EV is so much different than the skill set for building a ICE car. So,
absolutely. I mean, it's a computer on wheels essentially. And looking at what Tesla is doing with their chips and combining machine learning, like really cutting edge sort of technology, they do have an edge in terms of that, because like you said, creating normal cars is not like creating EVs. But not to cut you off. Go ahead.
Yeah, no. So I was just saying that it's baffling that they're expanding their gross margin. Also, I think in the last, I'll just get the numbers. I don't want to talk like bullshit, but the thing is, essentially the credits. People were like, oh, Tesla is just profitable because of carbon credits and shit like that. That's definitely not the case anymore. I think they had like 20 something billion earnings and only like 2 or 3 billion were from carbon credits. I mean, it's still a big amount, and that's the fucking purpose of the credits to begin with, but it's definitely not the reason they're profitable anymore, because that was the argument before. Like the difference between Tesla being profitable and not profitable are just the carbon credits. At this point, that doesn't make any sense anymore, because they're expanding their gross margin, they're expanding their deliveries. Literally, they're producing cars for cheaper. They're winning, dude. Like Tesla is fucking winning now. Like, and it's surprising how much they're growing. I just brought the numbers up. They grew by 20% quarter over quarter. That's insane, man. And the other car companies, I mean, it's not that big. We're still talking about a few 100,000 cars. Like they produced 200,000 last quarter, and they did 240,000 right now. Okay, on an annual basis, it's not bad. It's close to a million now, which is really good. Okay, for scale, for example, Volkswagen is 10 million. So okay, they still have a lot of room to catch up, but they're growing much faster than their competitors. Actually, their competitors are losing market share, and their production is slowing down because of demand, probably. But that's a different story. But anyways, Tesla is performing off the charts. But and again, it grew 50% in October, which is it's a bit much. And also, just to mention it, I'm sure most people have already heard. There were some rumors regarding them having a deal with Hertz, which propelled the stock even higher. Apparently, that is not yet finalized. However, it's in the works, and they'll be getting a market price for those cars. So they won't be getting any special prices, which is, I think, I'm not sure because I'm not that specifically in the car industry, but this might be unprecedented. Like until now, usually these kinds of car rentals, they were getting special deals because they were buying in bulk. Like for this particular case, they're talking about buying like 100,000 Teslas. So that's a lot of cars. It's a lot of money. But ultimately, they're not getting any deals. And and I just want to take a minute to explain my vision regarding the whole Hertz thing. yeah, by itself, it's not a lot of money. However, I can't afford a Tesla right now, and probably a lot of people in emerging markets can't afford a Tesla. But for example, if I will be going in the US and renting a car because I need to go from place A to place B, or in the UK or anywhere in Europe really, and if I can rent a Tesla, I'm gonna rent a Tesla, like just for the sake of it. And I've been seeing a lot of Twitter posts of people saying exactly this. Like literally, I'm gonna go and use the services of Hertz just because I can go with a Tesla. And I can personally relate to that. That's almost like a free way for me to test a Tesla and I don't know, see what the experience is like, and maybe like, yeah, okay, this car is worth $35,000, maybe, right? So I think the PR move on from Hertz is super smart, and it works for both companies much more than the deal itself.
Right. No, I agree. Well, I think it was on the back of the Hertz news that Tesla grew. Well, it started like a parabolic sort of run,
Yeah. Mm-hmm.
but
Mm-hmm.
obviously that combined with all of the news about them beating their estimates and so forth, just sent, it really sent the stock up. I would just like to cycle back um, to traditional finance and their wrong estimates of Tesla and the reasons why they might have been wrong. And this is primarily something that I've said for a while. And I think you can track this back to the fact that they just simply use a price to earnings ratio, which obviously compares to what their earnings are to the current price of the stock. And it gets mentioned so often, but nobody talks about the fact that PE ratios are commonly used for profitable and mature companies.
Yeah.
And while Tesla is very big, or it was even overvalued by some measures, by most measures, it still wasn't a mature company if you think about it. They still have quite a lot of headwinds. They still have a lot of sort of heavy lifting to do to overcome their obstacles. So I would actually beg to differ when people say that, hey, we're going to use the PE ratio to determine the value of this company. What I would say is to look into something that is less known, probably, or I haven't heard by many people, which is a price to sales ratio, a PS
Mm-hmm.
ratio. And a price to sales ratio is used more often for startup companies. So looking at the sales and ratio to price. And if you look at that, Tesla was still overvalued, but it was much less overvalued than it was in a PE ratio.
Sure.
And it's it sort of strikes me as surprising that nobody looked deeper into this when discussing Tesla. Um, because price to sales ratios are used for internet companies as well, particularly because they're new. So this is just to say that a lot of the tools that we commonly use to evaluate companies like Tesla, like in the words of Kathy Woods, are just simply outdated, and that might be part of the reason why this missed so many sort of big institutional investors and experts, and yeah, and the irony about a lot of the critique that people in traditional finance give, especially new companies or internet companies, is that they're using them. They use Teslas, they drive Teslas, they use Twitter,
Mm-hmm.
they see the utility of it, but they just look at the price to earnings ratio and determine that this is a overvalued and sometimes useless stock. Yet they are all over the internet, spreading their ideas using internet companies. So the best use case, in my opinion, is whether or not people are using it and if there's demand for it. And
Yeah.
Tesla, we know now, is obviously not a demand problem. You know, the
Yep.
bottleneck is simply manufacturing and shipping, and
Yep.
they're getting closer and closer to solving that. So hats off to Elon, and yeah, sorry to all the short sellers, baby. We coming.
Yeah.
So,
Yeah.
so did you want to say anything
No, no,
in
I
addition
just
to?
I expressed what I wanted to express earlier. The thing is, yeah, what you said with the PS, it's true, and there are other metrics, by the way, which can actually tell you if a company is actually growing. But yeah, even the PS is a bit high for Tesla. It's like 30, so that's a
Yeah,
bit excessive, and the PE is 380.
yeah,
But
that's
I was just telling my dad, like I was telling him, I made this amount of profits on Tesla, and I was like, you know what's crazy? I bought into Tesla when the PE was 660, and it's half of that now, and I still made this amount of money, and I was like, basically proving your point. Like you need the right tool to evaluate, and just looking at numbers will never tell the actual story.
the
You
whole
know?
story.
Yeah.
Yeah,
And also, uh, again, I just want to re-mention it. The whole thing with Tesla producing microchips in house is just amazing, and buying them from AMD or Nvidia or whoever they're buying them from. But they say they have supply chain issues, but they're still blowing their numbers quarter by quarter. And my question is, how much would they actually sell if they weren't having these problems? Like, how much are we talking about here? So yeah, that's it's interesting.
breaking the bank.
Yeah, yeah,
Elon is about to is about to crush global poverty next.
yeah, dude. That story was so awesome. So yeah, basically for anybody who hasn't heard about this, there was this. What was the organization actually?
Was it the United Nations? Somebody from the
Uh,
United Nations? Yeah, don't quote me on it.
yeah, whatever. I think it was a non-profit organization, and they were like, oh well, if Elon Musk would just give 8 billion to something and that and this, and he
Six
could
billion.
solve world hunger. And Elon Musk was on Twitter. He was like, yeah, okay, just give me the game plan. I'll sell Tesla stock right now and just give you the money. But we just need to do it in a transparent way so I can see exactly what you're spending them on. Total
Blockchain,
silence. Total silence. Yeah, obviously, like
crickets.
blockchain fixes this, but yeah,
Yeah, I think it's hilarious when people think that simply, throwing money at a problem will solve it. Like poverty is such a complex problem. Obviously, I do agree that, it probably does need more funding to get solved, obviously. But simply throwing money at it is not gonna erase it. You know what I mean? There has to be like some sort of structure. Like, what is it distributing? What like, is it just charitable? Because charity can go on forever. You know what I mean?
yeah,
But
exactly.
building systems for those people that are in poverty to sort of help themselves is probably a smarter thing to do than just to give them money. So,
Obviously, yeah,
and I think a lot of these people are they're just playing sort of virtue signaling games that they're not really trying to solve the problem. Which is why I love that Elon said like make a public like open source type document and tell us where the money is going, and for everybody to see. and
exactly.
and I think he replied with something along the lines of sunshine is good. And I don't think he elaborated what that meant. Basically, that there's this saying, sunshine is the best disinfectant, meaning if you
Shedding
put
light on shit.
exactly, and that's the whole transparency part about it. That's the whole open source thing about it. That's part of the reason why banking might change due to blockchain, because if everything is out in the open, like people are less likely to do dodgy shit.
Yeah.
You know.
Mhm.
So yeah, kudos to him, man. And sunlight is the best disinfectant. Before we close on Tesla, I just wanted to give like a really quick and dirty bull thesis on why I think another stock relating to Tesla will boom, an entire category, I would say. Um, so basically, if you believe in the long-term success of Tesla, you would also have to believe in. Actually, let me cycle back. If you believe in the long-term success of Tesla, you would also have to believe in their end game. The end game is self-driving robotaxi networks.
Yep.
If you have self-driving robotaxi networks, one of the primary thing that will happen when people are getting into cars and doing long distance journeys, which is what's predicted, that people will opt to get into cars to do these long distance journeys, as opposed to planes, for example. It's just less friction, less hassle, right? Um, what will happen is in-car entertainment will go up. The same
Sure.
way that when long-haul flights sort of came about, um, in-flight entertainment went up. And I
Hmm.
was just thinking, to myself, and maybe whoever's listening can do a sort of think back to the last time they went on a long-haul flight and got up at night to go to the bathroom. Because for me, at least, when I was on a long haul flight, I think I was like years ago. I was I think I went to America,
Hmm.
and I was on a long haul flight, and at night I just got up, and then I realized that every seat had a movie playing in a chair in front of
Hmm.
either a movie, a series, or they were playing some kind of music, or maybe even games.
Hmm.
And obviously at that point I wasn't thinking about fucking about investments.
Yeah.
But now I think back and I realize that um, that this was an indicator of what's to come. Because looking at all of those screens lit up at night, and you see everybody's playing individual movies, series, and music, whatever. The same thing is going to happen when self-driving robotaxis come to play.
Sure. Yeah.
Now, obviously, this is a long-term play. Like we're still at the beginning of it. But the way technology is going, my prediction is that we'll see it in less than 10 years. But if you're in it for the long haul, and you're willing to have like a time horizon of 5 to 10 years for an investment, then in-car entertainment would definitely be something to bet on. And what's cool is that if you look at Tesla right now and how gigantic it is, um, I don't think investors have made that connection yet between in-car entertainment and self-driving cars in the future. Therefore, those stocks that are in that category are incredibly undervalued compared to Tesla. You look at Roku. I think it's been down quite a bit this year even. Um,
Hmm.
and Roku is the one particularly I'm interested in. And the same thing will happen for many of the others. So my bull thesis is that Roku will will be very important, and even Netflix, to be honest with you, and things of that nature. Yeah.
I'll just say this. First off, from what I know, I held Roku in the past, but for me, Roku always seemed like a hardware company. I know they're trying to transition towards content, but I don't think that's their strong suit yet. I think it's just hardware for now. So they need to transition because, as we see with Tesla, probably they're not going to buy a Roku device to put them in the car. Like if they're going to buy anything, it's going to be probably a suite of software, maybe, let's say, right? So from that perspective, I think going towards the subscriptions you could get is better. But even this themselves, even Netflix and Spotify, again, just like with the same ratios we're talking about, they seem a bit overvalued as well. So the question is,
No, overvalued by what metrics? By a PE ratio once again? Are we doing
Yeah,
the same mistake again?
but no. For example, I mean, okay, I'll just make the case for PE ratio in this sense. Look at
Sure, sure, go
Netflix.
ahead, go ahead, go ahead.
Netflix, dude. Netflix is not profitable, and it's still fucking growing. It has a huge market cap, and basically on certain metrics, it's basically losing market share. And it's like, and I know we've had the discussion before, and I never held Netflix because I think it's I think it's overhyped for what it is. I think it's useful. I think a lot of people have it. Even right now with Squid Game, like it blew up, and I was like, okay, they got a good series after a couple of months of not having any good series. So is that a reason for its market cap to blow off? So I think maybe it's a bit too hyped for its own good. And the question is, where do you go from here? Because they have huge adoption, they have a loyal fan base, but they can't seem to monetize well enough. So at this particular moment, Netflix isn't super attractive for me. Like in terms of what they could do to, well, unfortunately, squeeze more money out of the customers, because that's what the company needs to do, unfortunately, right? Make money.
Right, right.
And they can't seem to make more money. From this perspective, Spotify does a better job. So yeah, it's the question is, where do you invest? And I don't think the future belongs to Netflix. Not at these evaluations at least. So
Hmm?
that's me.
Yeah, yeah. I would have to. 1 second, my screen went off again. Yeah, I would have to disagree. Just I mean, on many different fronts, but um, yeah, I agree. They are having trouble monetizing right now. Um, I would also say Netflix grew up really quickly and became a household name. Um, one of the one of the ways to see if an investment, at least on a really shallow level, is a good investment is once it turns into a verb. You know, like I'm gonna Netflix and chill. I'm gonna Google. It's not Bing. It's not. It's none of these. Obviously, this is just to say where Netflix has gotten to. This is not to say where Netflix is going. Like you said, they can lose market share. They can just vanish into unknownness, so to say, due to other competitors coming in like Disney Plus and so forth. But Squid Game, like you said, is a perfect example of how much Netflix dictates culture. And for one, I think investors don't know how to measure culture. That's for one. They don't know the impact of it. That's two. So there's really no hard metrics to use to evaluate that. And in my opinion, it's very subjective, so to say. But the reason why I think, in particular, just aside from how much influence Netflix has in culture through their series and stuff like that. They bring out that series where they were playing chess or something like that. I forgot
Yeah,
what.
yeah, 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 yeah.
And then
The
chessboard
Queen's
game.
Gambit, I think, right?
Exactly.
I
And then
haven't seen it.
yeah, and then chessboard games have like 5-digit increase in sales online. You have Squid Games, and then people start wearing Halloween dresses and inspired by Squid Game, and all kinds of stuff is popping up left, right, and center. We even have a shit coin that came up the other day that went up to 2 trillion and then went to zero. What I'm saying is that this, like, too many discount that, and particularly investors discount that. And just me being a young person, I feel like I probably have a better um, sense of sort of culture and hype and stuff like that than a investor that is looking at numbers, for example. So completely numbers aside, but now those are sort of some reasons that wouldn't usually be sort of raised in traditional finance, in my opinion. But now to some sort of hard reasons why I think Netflix will continue to be great in the future. They're getting into gaming. They've already launched products for gaming. I think subscription gaming gaming in general is the future. But being able to do that on Netflix and tapping into their current user base for that would be incredible. And if they follow that entire gamification wave, I think they will take home a lot of money on the table. And I haven't heard of Disney Plus doing anything like that yet. So while they're creating, and funding series like Squid Games that affect culture like that, they're still working on and innovating in terms of giving you a diversified set of products
Yep.
and breaking new ground. So, in my opinion, that's part of the reason why Netflix will go up. And that's completely aside our original discussion about in-car entertainment. So that will be another thing that will come into favor for Netflix. And yeah, that's why I would say I disagree humbly. But yeah, we can agree to disagree on that.
Yeah, yeah.
So
Well, that's the thing. I'm not shorting it, but I'm not buying it either. You know.
yeah,
So it's just, yeah.
yeah.
Let's
So
move on.
the next thing that we wanted to talk about was the metaverse, and like I said earlier, we talked about the metaverse in our podcast about Solana. Was it the fourth or fifth podcast or something? We
Probably.
talked
Yeah.
about the metaverse, and in that discussion, we we only mentioned Facebook sort of on the side, and it was on it was because I read some article that Facebook was sort of undercover employing 10,000 people to work on VR,
Mm-hmm.
which was 1/5 of their company at that point. And I think at this point, is it almost half of the company that's working on the
Yeah.
metaverse or more?
Yeah. I've seen numbers like that. I think. Yeah.
Yeah. So
And also, they were initially rumored also to invest like some hard money, and I think the rumors were initially like 2 or 5 billion, and then they said 10, and I think it's 20, and I was like, those are some big numbers. Like,
yeah, and so just for anybody that's sort of interested in what we were talking about, we really just summed up a few metaverse projects that we thought were interesting. At that point, we didn't know that Facebook was that deep into it, and then eventually would change their name and their entire sort of direction of the company. We were talking about Nvidia and their Omniverse, which is like a platform they give different companies to be able to create virtual environments to sort of test run things. Sort of architects can use those environments to look at or create architecture before they then build it, which is really cool. And Nvidia has, I think it's been tested by 400 companies around the world, but this is a very business to business product. It's called Nvidia Omniverse. We talked
yep.
about a bunch of other projects online. I think there's Upland, where they're selling digital land that is relating to sort of real life land ownership and stuff like that. There's Decentraland that allows you to do all kinds of stuff, really hold like auctions, have like galleries that you can virtually walk through and so forth.
Hmm.
Decentraland also went up quite a bit. I think it's
Yeah.
correct now. So there's loads of metaverse projects, and Facebook just being one of them. And to look at that, I didn't look at the entire presentation. I just looked at a bit of it, and I'm just surprised that a company as big as that sort of took such a hard left on their direction and are pretty much all in now because this is, they changed their entire name to Meta and stuff like that. So yes, it's pretty exciting because what this means for the entire category of the metaverse is huge. And now there's sort of stories of Nike putting in 7 patents for metaverse related products. Microsoft is looking to release theirs in 2022. And there's a lot of things bubbling up. So I think, just like we said in the podcast, this might really be the future. And it will be one where there's many different metaverses. And it's exciting to see. What do you think?
I basically have the same opinion I had then, which is, well, not surprising. The trick is making them interconnected, like having your own ecosystem. I mean, it's not that it's not going to work, but basically you're going to end up with an Apple or Microsoft situation where you have basically organizations or groups of people who have, let's say, an iOS hub, a Microsoft hub, Google hub, and that's it. So, and they don't connect. And like I told you, dude, trying to conceptualize what connecting metaverses would be is absolutely insane because the complexities of the chains.
Yeah.
So that's the problem for me. Like, I hope it won't be like a niche thing where each company builds their own. That's why from that perspective, I think I'm a bit more bullish or optimistic on a blockchain solution or a smart, who knows, maybe a smart contract chain specifically for metaverse will emerge or something like that. Like you need a common set of rails in order to build an actual metaverse, not basically a collection of metaverses which are unconnected. But yeah, so what I will say is this is definitely in its infancy. Of course, companies are saying, "Oh, we're gonna make our own. We're gonna do this and that." But basically, the same thing they said the same thing about, for example, AR goggles. They said the same thing about Internet of Things. They said the same thing about artificial intelligence. They said a lot of technologies came and went, and it's not like they went extinct or disappeared or people aren't using them or still there aren't projects trying to be built on them. It's just that right now it's super hyped and everybody's claiming that they're going to make a metaverse. Okay, we'll wait and we'll see in 5 years who actually has a metaverse which has any functionality and they didn't drop the support for it. For example, like I don't think I mentioned on the podcast, but one of the most interesting things for me was gaming platforms like Google Stadia or GeForce Now. The thing is, I can't say I'm a gamer anymore, but I would game every once in a while. But I don't want to spend hundreds or thousands of dollars in building a PC just so that I can game a few hours a day. So a few hours a week, sorry. So from that perspective, stream gaming was like a dream come true for me. The problem is there were so many companies who said they were going to do it, but Google Stadia basically stopped. GeForce Now is still going and they might be the winner, but I'm sure it's a major losing part of the business right now. So basically they have to use other parts of the company just to fund it. And yeah, it's a high risk, high reward play. Like if you do it and you become the dominant force in stream gaming, okay, then you make money. If it just goes away, you obviously lost a lot of money. So from that perspective, I kind of get the same vibe with Metaverse. It's like it's super early. It might be a big thing, but we'll just need to see that companies invest in it and basically there's public adoption. Because even like you said with the VR goggles, I haven't got a pair of VR goggles now. I'm planning to buy it, right? So that I can play some shit. But even VR goggles, they didn't get a lot of traction. Like they're expensive. You need a PC or a console to run them. Not everybody can afford both of those. So again, adoption is maybe a bit further than we expect. Again, this is not just being bearish. I'm just being realistic, I'm not going to get enthusiastic about a thing where 98% of the planet can't access it yet. And that's the truth.
Yeah.
Right? So Yeah, and we'll see. Like at this point, even with Facebook, I'm like, what are you gonna do exactly? Because you cannot. It's not like you can afford to send people VR goggles to their house, log into Facebook using this. No, you won't be able to do that. So either gonna start mass producing some affordable VR goggles, and if you are, good for you. But as most people know, hardware manufacturing isn't the most profitable shit in the world, right? It's actually quite money losing. It's interesting. I'm curious where it's going, but I'm not super excited yet because I don't know where it's going. So
Yeah, I agree. I I'm a bit bearish on the idea that that a metaverse will be via VR goggles, because obviously the difference between VR and, for example, AR is that VR is fully immersive. So and AR is kind of in your, or sort of merging in with reality. The problem I have with VR is that if you look at the average usage of a VR set, it is once, actually.
what? How?
The average usage of a VR set is once.
Like people buy it and only use it once?
Yes.
Fuck. Well, that sucks. Yeah.
So for them to think that this will, I mean, and VR has been so long, has been praised as the, thing coming. Even VR porn. People thought that obviously you wear these things and you can see like the actual, you know what I mean? But it's still,
Yeah.
it, even that, even something as addictive as porn or whatever, didn't really catch on with VR for some reason.
Yeah.
So I guess what I'm trying to say is that it's been hyped for a long time, and it hasn't shown the results like you said. And to expect, like again, like you said, 95% of the population that cannot afford a VR set, or even a PC or whatever, like, what
Sure.
are they gonna do?
Yeah.
So I'm a little bit bearish on thinking that a VR metaverse is the way to go. I think AR makes so much more sense, even in terms of cost. Like what I think, and I think Facebook is getting into AR as well, because they did a partnership with Ray-Ban, and they
Yeah.
have these
True.
glasses. They have these glasses that you can wear, and I think if you can make those glasses work, I think that's actually so much cooler, because walking down the street and then getting all of the information of this particular street, where something is, to me that is really like being in the future. Wearing
Hmm.
a VR set and looking at stupid icons of myself and other people, and childlike, you know, like graphics and stuff like that. To be honest with you, I'm not looking forward to that.
Yeah.
It seems
Yeah.
silly. To be really honest with you. So I'm bearish on that, but that's just me. You know what I mean? I don't know what the next guy thinks. Maybe they think it's the greatest thing ever. At least, and in my friend circle, I don't see anybody that's like hailing this as a huge a huge win or a huge thing in the future. In fact, they're very bearish on it. But like many technologies, we've been wrong on
Yeah.
what they
And
could do.
like you said, the move is very ballsy. So my gut feeling is Mark has something up his sleeve, or he wouldn't have pivoted as that. I think also what people are, I think, maybe misunderstanding, or maybe I'm misunderstanding, is that he did this for multiple reasons. Like Facebook was under fire. Facebook
And
had a
incredible
lot
fun.
of negative PR for fucking good reason.
They had to
And
change the narrative, yeah, on
they kind of
themselves.
had to change, yeah, the name, the direction. They had to change something because at this point they were just continuously being attacked. But it doesn't make the case better. Like if, for example, if Twitter was announcing a metaverse, I would be much more on board than Facebook. If Google was announcing a metaverse, I would be on board. But if Facebook is announcing a metaverse, I'm like, okay, and you're gonna know what? Like what I'm seeing all the time? No, thanks. It's fine. Like I've been on Facebook. I know what you do. Like why would I want that? So
Yeah.
yeah, no thanks, Mark. I'm out.
What I do think would be possible would be the interoperability between different metaverses. I think that might be a possible thing. Because many different metaverses is definitely going to be the way forward. The question is just: is it going to be AR? Is it going to be VR? Is it going to be like some mix between those? Last words on Facebook?
No. Again, it's interesting, but I don't think there's any actionable intel here for me. Like, I'm waiting. I'm still waiting on the. Oh no, actually, I did have something to say. Was if there regarding what you were saying, if there's one thing people could be realistically bullish about, semiconductors, like whatever.
Oh hell yeah!
This whole future with Tesla, self-driving, whatever, metaverse, not metaverse, Web 3.0, you need semiconductors for all of this.
All of the shit, the entire future. If anything, that makes
exactly
incredibly bullish on Nvidia, and Nvidia is shooting through the roof right now. But I mean, buy every flipping thing you can.
Mm-hmm.
Do you hold anything in TSMC?
No.
I realized that Revolut has TSMC.
Okay, so
like the cheap sort of side hustle of Revolut.
Oh no, dude, Revolut is hustling pretty nicely. Like they're listing a lot of stuff, and they have a lot of crypto.
Yeah.
I think they have more crypto than eToro does now. So no, good for them. They're straight on hustling.
Damn. Okay. Yeah, I'll take it back. Sorry, Revolut.
Yeah. But just to be full honest and disclose this, they don't actually. So I don't know what's happening internally, but you cannot access your crypto on Revolut. The good part is that, for example, on eToro, you can go to eToro X, and you can actually access your crypto holdings and transfer them out. So that's a bit different because Revolut.
Yeah, they don't even have a wallet for you to. You know what I mean? Yeah. That's what I'm saying. Cheap side hustle because it's not proper. You know what I mean?
Yes.
I heard they're even thinking of releasing a coin.
I would buy that.
I'd probably buy that too. They're incredible bank. I mean, they're incredible neobank, and shout outs to them. Incredible exchange rates. They're doing something right. So, next thing that we wanted to talk about was Polkadot Parachains. So, lead the way, sir. What are we thinking about Polkadot and what they've got coming up? They've got a few auctions. They have Kusama. A bunch of projects that are interesting.
So I'll just do a super fast introduction for Polkadot, just so that people can just get like a super introduction lesson into Polkadot. So Polkadot was founded by Gavin Wood, which was one of the Ethereum co-founders. As we know, there's Vitalik, there's Hoskins. So there's a lot of people who were building the Ethereum together, and at some point they're like, I'm out, I'm gonna go build my own stuff. It's fine. Gavin Wood is one of them. Polkadot is one of those projects, and basically what Gavin Wood and Hoskins have in common, I think they were both like, we wanted to do something with Ethereum. We either didn't agree on it or couldn't, so we decided to make our own stuff. Fair enough. We talked about Hoskins' vision. Gavin Wood's vision is a bit more interesting, and he was actually I think he was the CTO of Ethereum, so I think he was the technical lead. So he might be one of the better technical people on the team, which doesn't say anything bad about the rest of them, but I think he was the actual technical guy on the team. So basically, he created his own crypto, but he has a very interesting vision of the whole thing. So obviously, Polkadot is proof of stake, and they have smart contracts. But the whole concept of Polkadot was that, okay, instead of just letting people build a gazillion projects on this blockchain network, which there's nothing bad with that, we're gonna try to actually create an ecosystem, a blockchain of blockchains, in the sense that we basically, let's say in the grand scheme of things, the ideal path or goal for a blockchain would be to be the next evolution of finance. So they were like, okay, what if we create a structure where we have some slots where people can plug in their ideas, and in the end, we actually have a functioning ecosystem that is coherent and works with each other to create an actual ecosystem, which is an interesting idea. So that concept is called Parachain, and it's called basically it's Parachains, and they have the relay chain. So if you were to conceptualize it, is that the dot is the underlying relay chain, and then you can plug in individual parachains, which is basically different blockchains. However, they would inherit the basic property of the relay chain. So basically, it's like they would inherit the security and the flexibility of the mother chain, but then have their own mechanics on their own blockchain. So in order, if we were to create a parallel with Ethereum or Terra or BSC, instead of having a gazillion projects, we're gonna have 10, 15, 20, 50, 100 projects linked together to create a cohesive ecosystem in which the projects communicate amongst each other and maybe even share features. This is basically the vision. I think it's an interesting vision. Like, one of the best things about this, let's say the smart contract chain war that is going on is people have different vision. Like Ethereum, they started from proof of work. Now they're going towards proof of stake. Terra is doing the whole thing with UST. Cardano is going towards the whole thing with scalability and governance and treasury, and they're going full research oriented and long-term vision. A BSC was like, we just want small fees and we're gonna revolve around this central exchange. So it's a battle of ideas, and I cannot help myself but be super intrigued by everything, because it's like you don't know who's gonna win. It's just the future will tell which is the best idea, which is kind of exciting. It's meritocratic and it's basically smart, and I like meritocratic and smart.
Absolutely.
Yeah. So this was like a super short TLDR in Polkadot. So basically, they have slots. They have these slots. I think they don't know exactly how many they can support, but they think it's around 100. So basically, they're gonna start auctioning them off. And the way this is gonna work, it's actually quite simple. Is like, okay, it's a bit gamified and it's a bit made to be anti-whale or anti-sniping. They're going to have an auction period in which people can basically attribute their dot to their favorite project. And the project with the most dot wins. This is super straightforward. The interesting part is that you don't know when the snapshot will be taken, which means that there's going to be 3 days of like a pre-fund round, and then 7 days. In those 7 days, you don't know when the snapshot will be taken. So you cannot just like snipe it or flash loan it or something like that, There's people actually have to have conviction and put their most of their dot in what they think the best project will be. And the project with the most dot accumulated will be assigned the slot for a maximum of 2 years. So it's an interesting gamified launch event for the Parachain slot. And the good part is that basically your dot gets locked for 2 years max. And in return, you get some of the chain's tokens. So this is the event that's happening. I read up about a couple of them. I had a few dot. I invested some of them. Binance is having a super interesting event, and yeah.
That sounds amazing, man. That sounds incredible. I didn't know that this is what Polkadot was trying to do. I feel like it's a much more clean and vertically integrated approach, really.
Yeah.
If you think about it.
And realistically, like I said, you won't know which is the winning idea. This seems like a great idea. I also love the Terra idea. From this perspective, no offense, Cardano and Ethereum, they seem very meh. Like, okay, what do you do? Oh, people can just build on you. Okay, that's fine, I
Yeah,
guess.
it's so disjointed and all over the place,
Yeah, exactly.
and there's so many hurdles that you have to go through. And this is what I was thinking about layer twos. Obviously, Ethereum does have the most opportunity on it and the highest yield. And just like I think I saw somebody post a tweet saying Ethereum is expensive to be on, but so is London, so is every capital city in the world. But people stay there
True.
because
True.
there's outsized opportunities in them, and they're
Yeah.
willing to pay the cost for it. So that's true. But those capital cities are also having an exodus. Of smart people essentially leaving it for other places that have less costs. So and the same is happening in San Francisco and so forth. And you can make that example on crypto as well. People are migrating from Ethereum while it does have the highest yield. They are migrating to Solana, to Terra, to Avalanche, to
Exactly.
Polkadot, and so forth. And Binance chain. So the idea is that while the most yield is on Ethereum, because the barriers to entry are so high and you need so much capital to really to play on it, they're losing a lot of market share. And
Yeah.
if Polkadot and so forth, they can manage to offer similar yield with better sort of integrated design and vertical integration, I think, the throne is for the taking, really. I find it interesting that they specifically are going for a vertical integration approach, whereas Terra seems to have managed to do this without, from the get go coordinating with the others. You know what I mean? Like
Yeah.
they all seem seamless and they all integrate with each other without
Yeah.
having planned that in the first place. But maybe I could be wrong. Maybe it was planned like that in the first place. I don't
And
know.
having USD as the center of the whole action. So I think it's
Exactly.
planned. I think it's a feature of the network. Maybe again, maybe Terra has the combination of openness and liberty to do stuff with the cohesiveness of the Terra ecosystem itself and the Cosmo ecosystem, maybe.
Yeah.
But then again, I'm just saying this, and I'm not just being bashful on Ethereum for the sake of it. At this point, and Cardano for that matter, Cardano and Ethereum, they seem really bland. Like they have no plan. Like it's like they have no plan. They don't have any bridging, any interchain communication. They have none of this. They just have projects on them. And again, it just seems boring, and yeah, you can't quantify excitingness, but
Yeah. Absolutely.
yeah.
Yeah. Really exciting. So, what sort of specific projects are you interested in on Polkadot?
So I'll just say this: I have YOLO'd some money without much research, but just because Binance is doing an event where they're actually getting you some tokens, like a pre-launch event. So I just YOLO'd some money because I want those gains. But there's one specific one that piqued my interest, and it's called Litten Tree, and it's about blockchain identity. And when I thought about it, I was like, this is super interesting. Obviously, it's abstracted and it's not like real life identity, but it's a way to be identified and recognized on the blockchain, which I think is super interesting. And I think in the whole ecosystem of the whole Polkadot mindset, I think it's super relevant. And I think also I forgot to mention this, but I think it's relevant here. They said they're going to reserve some spaces for the super fundamental projects. Like some parachain slots are going to be for fundamental projects that they think deserve to be there. And I think from a certain point of view, Litten Tree will be one of those because it's like a unique selling point. And
Cool.
mostly the other projects they're different. Like they're DeFi based, they're NFTs, they're metaverse plays. So there's a lot of projects. I think there's over 100 of them. Yeah, it's
Okay. We'll
112.
link to them in
Yeah,
the
yeah, yeah.
description notes.
I'll put the link. So it's not easy to pick. However, I'll also say this is you kind of know who the winners might be based on their social media, based on their communication with the foundation of Polkadot. Because there's some people who basically, for example, designed the core Polkadot wallet. Like, okay, go figure. I think maybe they built a really good project, you know? So you kind of get hints like who's gonna get maybe the first 5 spots. Yeah, maybe after the 5 spots, it's an actual, you never know who's gonna win, but you kind of know who is the top 5, who are the top 5 projects. Obviously,
Cool.
it's crypto. There could probably somebody can release a Shiba dot tomorrow and it's gonna get a shitload of money, and people will be like, we're not getting identity, but we're getting Shiba dot. Well, I guess you are, yeah. So there's always that wild card, but other than that, yeah, there are like 3 or 5 projects which are centric.
Awesome. Yeah, thank you for that. That definitely increased my sort of bullishness on Polkadot. So, in closing, I guess we'll touch a little bit on pre-IPO investing. I thought this was interesting one to put forward because it's very rarely discussed because there's barely any sort of products and access to it for retail investors, really. And you have to be an accredited investor to invest in pre-IPO companies, which I think is a bit of a is a bit of a scam or fraud and messed up in many different ways, because essentially, believe it or not, in most companies' cases, the majority of the growth they see is pre-IPO.
Yeah, of course.
As surprising as this may seem, even right now where we're following companies that are doing 100x's after they IPO'd, for the most part, if you follow the data, the majority of the growth happens in a pre-IPO phase, because obviously when a company first issues their stocks, this is in pennies, really. So this podcast is all about, obviously, legalized robbery, meaning finding unfair and asymmetric games where you get asymmetric outcomes, and that also means being extremely early. And in investing, being extremely early means almost everything in most cases. Timing after a stock blew and stuff like that, you can still make up and get new chances of entry into stocks that have risen a lot. But for the most part, if you're early, you win. And pre-IPO investing allows you to do that. Now, back in the day, this wasn't possible for anybody that didn't have $1 million in the bank. But today, there's different services that are popping up that allow you to invest, say, minimum $100, pounds, euros into pre-IPO, and oftentimes through crowdfunds. Well, mainly through crowdfunds.
Yeah.
Crowdfunds being a way for companies to raise money via many different people and small sums, as opposed to one big investor. So this gives the option for even retail investors to get in on private companies.
Yeah.
And I just wanted to touch on that in particular. So there's not that much to it. Really, all you have to do is sign up to these websites and do the same research that you do on public companies for private companies. Obviously, in this case, you have less data. So a lot of it is really following your intuition and looking at the CEO, looking at their track record, looking at the team, looking at their track record. It's all of the stuff that you'd basically do to evaluate a crypto project, because in a sense, they are a really cool example of a pre-IPO and raising funds through, offering token offerings. So the same principle applies. And just to say this in conclusion, this is not financial advice. Nobody sues. But if you're looking for sort of new ways to invest and diversify a little bit, look into that. I invested in a project called Linen, will show the sort of picture and stuff like that in the final cut. They are basically an on-ramp and crypto wallet sorry, I said manufacturer. Hold on.
Yeah, but but I think they're just on iOS, right?
I'm not even sure, you know. Well, yeah. So Linen is basically it's basically like Coinbase, somewhere to buy crypto. The only difference is that they already come with a wallet, and the interface is very simple. It lets you buy, swap, and do all of the stuff that you do on Coinbase in a interface that is just as simple as Coinbase. And the only problem with it currently is that because of the high fees, if you're trying to create a Ethereum wallet, you have to pay for deployment of the wallet based on current gas prices. And with Ethereum, it's sky high all the time. So yeah, they're facing massive obstacles because this stopped me from essentially signing up actually. So if they can get any layer twos, if you know, by coincidence, by huge coincidence, some team member on Linen is listening to this, add some layer two projects on there that have, you know, like fees of a few cents, you know, or pennies.
Yep.
And then you increase adoption by a lot because the app looks great, the service looks great. It's got investment by all of the big people that invested in other crypto projects, Coinbase, I think Tiger Capital, and you know all of these different small. Is it Polychain and
Yeah, I think
Multicoin?
so.
Loads of these different investors have invested in this. And another thing I did pre-IPO investing was through Crowdcube, and I invested in the British neobank Monzo. It's a competitor to Revolut. It's very popular in London. Every time you see one of those orange cards, it's Monzo pretty much. I was lucky to get in on their third crowdfund round, and yeah, I think they're doing pretty well. Had some hurdles in the pandemic, but doing well for the most part. So yeah, check out those. I'll add further links to different types of pre-IPO applications and sites that you can join.
Yeah.
Any words?
Regarding this is super. Oh, and one thing you should mention, and you have mentioned in our discussions, is the fact that for better or worse, but probably for your better, you're locked into this investment.
Oh yes.
Either until the next round or until going public.
Oh
And
yes.
this is super interesting, dude. Like in the whole scheme of things, yes, sometimes it's good to sell out of stuff. However, if you have trust in the company, sometimes you just need a lot of self-control not to run towards the exit. But basically, with pre-public investment, you kind of have that because you cannot sell out of it anytime you'd like. Again, it could seem like a blessing and a curse, but I think it's a positive. Me personally, I think it's a positive, and I think I have good self-control not selling out of shit just because the price is dropping. But this is super important. And this is super similar with what I was saying the last episode regarding launchpads. It's the same idea. Like you're trying to get into projects before they go mainstream, before they go public, before they get to exchanges in terms of crypto. But yeah, and when they do, they basically explode to the upside, like 20x explosion. But okay, they don't explode as much for stocks and IPOs, but it's not very different. Like there's a lot of dumping when IPOs happen, and there's a lot of companies who are trading under their IPO price right now. And it's not because they're bad companies, it's because their IPO price was artificially pumped so that everybody makes money. There are some vesting periods, you have to pay some commissions. Obviously the VCs and or the hedge funds, they need to take profits because basically that's the only way to repay their investors. Like I understand all of that, but basically when you're buying a company at IPO, most likely you're scammed. It's just it is what it is, you know. So you have to call it like that. Like seriously, one of my rules is don't buy a company unless it's one in a 100,000 opportunity. Don't buy it in the first 6 months of IPO. Most of them in the first 6 months either go sideways or they go down. It's almost like a golden rule. Some exceptions, but most of the time it's like that. And it's because it's pre-pumped before the IPO. So honestly, sometimes you could probably make arbitrages just by getting into a company pre-IPO, and you
Hell
could
yeah.
still make some money.
Yeah.
So, but like you
Minus
said,
the fundamentals even.
yeah, but like you said, you cannot. You have to be an accredited investor. Obviously, you need like a huge chunk of money because nobody will let you invest $100. But some of the platforms you sent me, because I haven't gotten on this. Actually, Jerry has, so good for him. And I was also looking at some, but I need some liquidity. But yeah, you can do it with $100, which is super refreshing. I know it's not a considerable investment, and when it comes to conviction, probably you should have some more if you're investing in a company pre-IPO. But it's good to have the option, you know. Like Jerry said, for example, maybe you're living in London, you see Monzo, you think Monzo is the next big thing. It's pretty good to be able to invest in it if you can, you know. So I think this is super close to the essence of legalized robbery, trying to find solutions to basically just have the potential to have big returns.
Mm-hmm. Yeah, so on that note, I would just like to add sort of closing words. To win at investing, you either have to do something that others aren't able to do or others aren't willing to do. And
Sure.
really, in today's investment climate, which is incredibly fast paced, most investors have a lack of patience. So you can simply win the game by having patience, finding the right projects, buying them, and just hodling, as they say in
Yep.
crypto.
Yep.
So you win not by trying to outmaneuver anybody, but simply by self control. And this is a testament to investment being not just about being smart, but having like emotional sort of management and having self control. And it's quite incredible if you think about it that something that is considered so cerebral, like where you have to put so much thought into it and so much finance and calculation and stuff like that, could actually be won simply by controlling your temperament and controlling your impulses.
True.
So with that, I will leave you, and thank you for watching Legalized Robbery once again. Your boys will be back next week. We'll try and keep a more steady schedule. I know we've been on and off recently,
Yeah.
but we're back, baby.
Nice. See
Peace.
you, dude. Keep.
Nobody move and nobody gets hurt. This is a stick up by Jerry and Adrian, the Legalized Robbery podcast.